All right, today we're diving into the latest numbers on national department store sales in Japan for January 2026. Now, on the surface, the main number looks pretty good, a nice little rebound in spending. But as we're about to see, when you dig just a little bit deeper, a much more complicated and honestly a way more interesting story starts to unfold. It's a story about a major split between who is shopping and what they're buying. So, let's get right into it.
Hello! This is the Japanese Economic Review channel, where we break down the key economic indicators that you need to know about.
And here it is, the headline number for January. A 2.3% increase in nationwide department store sales compared to this time last year. So yes, we are back in growth territory. But to really get what this number is telling us, we've got to look at the trend over the last few months.
You know, that 2.3% might not sound like a huge number, but it's actually a pretty significant rebound. After sales actually dipped into negative territory for both November and December, this jump marks a really decisive return to growth. So the big question is, what's powering this comeback?
Well, the answer is a real tale of two very different shoppers. It turns out that overall growth figure is completely hiding a dramatic split between local Japanese consumers and international visitors.
And just look at this contrast. It is night and day. On one side, you've got domestic sales, which are just booming, up a very strong 5.5%, and that's for the sixth straight month. But then you look at inbound sales from tourists, and whoa, they've plummeted by a staggering 19.1%. That's the third month in a row of decline for that really key sector.
The official report really doesn't mince words. It says, and I'm quoting here, that domestic customer sales were strong and covered the decrease in inbound sales. In other words, local shoppers were the undeniable heroes this month. They completely saved the day.
So of course, this begs the question, how can these two trends be moving in such completely opposite directions? It's pretty wild. Let's start by figuring out that big drop in tourism.
The official data points to two main reasons for this. First, it's a simple calendar shift with the Lunar New Year. See, last year, the big holiday rush was in January, which created a really high bar to compare against. This year, it's in February. And second, and this one's probably more impactful, there were travel advisories from China, which led to fewer flights and a pretty significant drop in the number of visitors.
Okay, so if domestic shoppers are driving all the growth, what exactly are they buying? Well, the data shows a really clear trend toward high-end luxury items. Let's break down the different product categories. And what a contrast it is. I mean, just look at this massive surge in things like art, jewelry, and precious metals, up an incredible 17.7%. At the same time, a staple category, something you'd think would be steady, like apparel, actually saw its sales shrink by 1.2%. It points to a really clear shift in what consumers are prioritizing: high-value, luxury stuff.
And there's a really key reason for this luxury boom. The report mentions a rush of what it calls pre-price hike demand. It seems savvy consumers knew that certain luxury brands were about to raise their prices, so they decided to buy now, basically pulling future sales into January. Pretty smart.
The story gets even more interesting when you look at other categories. Sweets had a fantastic month. They were up 9.3%, and that was thanks to some early Valentine's Day promotions getting underway. But on the flip side, you have fresh foods, which just continue to struggle, marking an incredible 22 straight months of decline. That's almost 2 full years.
So we know what people are buying, but where is all this growth actually concentrated? The geographic data tells another very, very clear story.
First, to get the lay of the land, you have to realize that Japan's 10 major metropolitan areas are the absolute engine of department store retail. I mean, they account for a massive 79% of all sales. The rest of the country combined makes up that other 21%.
So here's the crucial part. That growth was not at all evenly distributed. Those 10 major cities saw their sales rise by 2.9%. In contrast, all the other regions, when you put them together, actually saw a slight decline of 0.1%. This means that positive national number we started with, it was driven entirely by strong performance in the big urban centers.
Okay, so let's pull all of these different threads together and just summarize the key takeaways from this January 2026 sales report.
So, to recap the story of January, that headline sales figure showed a strong rebound, which is great, but it was powered exclusively by domestic consumers. And these local shoppers were really focused on high-end luxury goods, partly to get ahead of those price increases.
All of this was happening while a steep but probably temporary drop in tourist spending actually hid just how strong the domestic consumer really was.
And this really leaves us with a critical question as we look ahead. We saw this incredible strength from one very specific segment, the high-end domestic shopper. But with inbound tourism looking a bit volatile, and everyday categories like apparel and fresh food still struggling, is this one bright spot really enough to sustain momentum for Japan's entire retail sector in the months ahead?
That's the key question we'll definitely be watching for in the upcoming data. Thank you for watching the Japanese Economic Review. We look forward to having you with us again